Ladies and gentlemen, a very good afternoon and welcome to the Industry Forum of the 5th International Conference on Emerging Financial Markets and Policy EFMP 2025 organized by the Sri Lanka Finance Association under the theme Navigating Sustainable Growth and Innovation in Emerging Financial Markets. This industry forum, organized by the Department of Accounting and Finance of the Open University of Sri Lanka, focuses on a timely and forward-looking theme, driving sustainable finance through innovation, financial intermediation, and financial market solutions. Today, we bring together experts who play an influential role in shaping Sri Lanka's financial sector through banking, credit, market-based financial instruments, and financial restructuring. Their insights will help us understand how sustainability, innovation, and financial intermediation come together to shape the future of finance. So before we begin this discussion, it's my pleasure to introduce the distinguished panelists who have joined us today. And today we have Mr. Hemal Lakugigana, Chief Executive Officer, HDFC Bank. And Mr. Hemal Lakugigana is a highly accomplished professional with over 24 years of experience in the banking sector. His career reflects strong leadership in business and corporate management with extensive exposure to international training and development programs. His participation in global leadership programs in Japan and India has enhanced his understanding of diverse banking practices and global financial trends. Mr. Hemal, thank you very much for joining with us for this discussion. And also, we have Mr. Manoj Akvimana, Senior Deputy General Manager, Credit Control, Credit Administration, Recoveries and Legal, Sampath Bank. Mr. Manoj Akvimana is a multidisciplinary professional, over 30 years of experience in banking and finance, SME lending, branch banking, strategic planning, balanced scorecard applications, marketing management, research and development, credit control, legal and recovery management. His perspectives will add a strong practical and policy-driven dimension to our discussion today on sustainability-oriented banking operations. As the main focus of this forum is sustainable finance, we felt it is essential to bring together a broader range of expertise. Beyond the banking sector, sustainable finance increasingly relies on inputs from asset management, transaction advisory, and investment strategy, the areas that supports long-term, responsible, and impactful financial decision-making. And in this regard, we have invited Mr. Umar Ismail, a chartered financial analyst and also a financial restructuring specialist with us today. Having worked across multiple countries, and also I have seen that he has mentioned the true impact comes from a blend of genuine passion and strategic insights, regardless the market. And having seen this perspective reflected in his professional journey, we look forward to witness how the knowledge and the strategic insights he has gained from different markets will add a more depth and valuable color to today's discussion. Dear Mr. Umar, your presence here today is greatly appreciated, and also he is representing CFA Institute as well. So without taking much more time, we'll again warmly welcome them all, and here we are going to start our panel discussion. So these days we are in a discussion where there is a higher attention on the sustainable finance. And I hope you have heard about the National Climatic Finance Strategy and about sustainable financial roadmaps. So in a kind of a spectrum, today we are going to discuss about this aspect, and my first question goes to Mr. Hemal. So basically, these banks are acting as intermediaries in the financial market, but with regards to this sustainable finance, with this increasing attention towards the sustainable finance, now banks are having more attention towards it. So as a person who is having experience in that banking sector, how these banks can act as a kind of intermediary to support these national policies that we are discussing in order to promote the sustainable finance, maybe through green lending or the other kinds of financial market activities.
Yeah, thank you very much, Taranga, for inviting me to this event. And thank you very much for faculty members, faculty of management to organize such a very important topic discussions. And since we are in a university, I thought to initiate my discussion with how the sustainability concept came, which is very important. Actually, after the industrial revolutions, the countries wanted to produce more and more, productions and get the benefit of producing a lot of goods and services and selling the good and service to the other countries or any market, global market. So after that, they have realized that industrialization. The idea is to consume more and more products, right? So when they realized this one, they thought that they are using the resources, natural resources in the global natural resources. So basically, the concept is the natural resources should be available for not only the current generation, for the next generation also, right? They have realized that because of the overconsumption pattern within the people, they are exploit more and more resources, right? So that is how the sustainability came into role. I think in 1987, this was realized by United Nations also. Then the idea is to, we should meet our present needs without compromising ability to future generation, right? That is the global one. But very interesting point in this case is when it comes to Sri Lanka scenario is totally different, right? So if there are any academics there, since this is a university, they can study the global trend as well as local trends. But in our ancient time also, our people thought about the future generation, right? So we shouldn't forget about that, right? You may have seen this, what is called Dagab. In Dagab, basically Dagabs are treasury, right? So අපි ඒවට සිංහලෙන් කියනවා නිදන් තියනවා කියලා, right? So what is the idea of this nidang? Nidang idea is not, they are just, save their money or whatever the valuable things in this Dagab for use future difficult time, right? That is the idea. So if you take how the industrialization realized the sustainable, and locally how the people thinks about, we had a very good, value system as well as thinking pattern. We always think about, now if you take this, there are some quotation is there, which is, we call it, ඉර හඳ පවතින තුරු අපි ඉන්නවා කියන එක. Right? So I feel that there is some relationship with sustainability and ඉර හඳ පවතින තාක් තුරු අපි ඉන්නවා කියන එක. So I think the researchers should think about these things, right? We are not academic, we are just professional. But when I think about the sustainability, I don't know why the Sri Lankan researchers or universities are doing some research on this, right? Very interesting thing. Two different cultures, two different, value system, philosophies are thinking about differently about the, sustainability came into, discussion in 1987, just 35 years back, right? But we had that one, right? So that is the main idea. So any researchers, any academic, so I cordially invite them to do some kind of research on this one, right? So there may be another concepts may be there in our books, right? In our thinking pattern, in our, if you go meet a villager, they may actually advise us, right? So we always protect our environment also, right? So this is a very interesting thing. We should think about that. Now we will move to the sustainability concept. Now we are discussing sustainability concepts derived from the Western countries, right? So back to your question. Sorry for taking your time to approach this one, but I think that it is a very important thing. We have to rethink about our thinking pattern, right? So anybody is interested in this kind of research, I also can help them, because I also know something about that, the historical value system of this country. Now, after 1987, as I mentioned earlier, most of the Western countries think about the sustainability. Now, then this sustainability concept has come in different concept, different industries and different productions area, right? So when it comes to the banks, actually, when it comes to the bank, banks are basically doing the financial intermediation, right? So basically taking deposits and giving the loan. These are the basic the function of any bank, right? So now we want to embed it or incorporate the financial sustainability concept into our products. That is what we are doing, right? Now we are thinking about, most of the banks are thinking about differently, and how do they are developing a lot of products for sustainability. For example, fossil fuel is the resources now available in the globe, but fossil fuel is limited. This is available for future generations, right? Now, if you come to Sri Lankan scenario, Sri Lanka is a well-resourceful country, natural resource country, right? So we have enough, what you call this solar system, and we have more than 12 hours sunlight is there, right? And we have enough waterfalls. Now so energy is a necessary thing. I think that is the basics need of any society, energy. But so how do we generate the energy is the issue, right? If you are using the fossil fuel for generate the energy, so it will be costly and it is eroding these resources. So we have sustainable energy solutions are there. So most of the cases now, renewable energy, we are talking about renewable energy, right? So waterfalls are basically used for generate the power. So that is the one thing. The banks can help them to develop this kind of projects and fund into this project. So we are using this, but there may be, if you are blocking the putting the dam and blocking the water flow and generate energy, there may be some impact to the environment, right? So, but it is better to generate energy through the natural resources is a good idea, right? So, if you take country like Australia, they are recycle these things, right? So they are using the energy and the water and put into the, again in the during the night period, they bring the water to up and again they are generating the power, right? It's like a cycle. So natural resources are used for energy. That is a sustainable project. So other thing is if you are using the, if you are reducing the productions, if you are using if the production, I mean energy consumption is limiting, right? That also some kind of contribution may be there. For example, the banks are now talking about the leasing. Leasing means, you know, EV, we are talking about the EV vehicles. EV vehicles, you know, fossil fuel is minimally used. So these are the few products that the bank can think about when do they think about the asset sides. Not only that, the waste management. Waste management. These are the another product. And other thing is the banks are highly used the number of you know, pages and printouts, right? I think even the academics and lot of organizations are used. That can be reduced by introducing digital transactions and digitize the process. And so these are the things that the bank can think about to in order to promote their sustainable products. So we'll come back to again, if you are talking about investment opportunities, you know, I think during the last 2-3 months we have seen that green bond, blue bonds and things like that. And other important thing is the we called food security. Food security. So banks can develop some products for food security, right? So these are the products that bank can promote their sustainability through the financial products.
Okay, so thank you so much for that comprehensive explanation, and also I really appreciate that you have talked about this evolution of this concept as well, because our undergraduates also have joined with us via Zoom. So when they are going ahead with researching on these areas, I think that will be really helpful. And so moving ahead with this discussion, now before moving to what I really wanted to ask from you, Mr. Manoj, I know you have something to add to what Mr. Hema said about this concept. Is it actually something new?
Yeah, actually, thank you very much, Taranga, and thank you for inviting me this important technical session. I would say now, even though we discuss, as you very rightly mentioned, environmental, social impact and integrating ESG into the banking system as a new concept, but this as I will not going to talk about a historical background. I am not qualified to do that as a banker, and I think we have seen this concept is evolve in since 1960s onward. If you go, there is something called social responsible investment in those era. And we have seen that is it is discussed that organizations, businesses should invest, finance social responsible project. When they say social responsible project, at that era, it is focused on not harming the environment, deforestation, any degradation to the environmental assets, upbringing the underprivileged societies, women entrepreneurship, kind of things. I can well remember in 19th there is argument, discussion whether the banking sector should finance projects which lead to deforestation or oceanic pollution. Is there any emission pollution kind of thing? This started in 1960s. But in that era, it is more voluntary. Greater brands, world brands, they also adapting this kind of thing voluntarily. And then in, if I recall, 1994, triple bottom line concept came into arena. So in that concept, it is argued and proposed that ethical institution, a strong institution, should not only focus on profits or financial side only. They talk about people as well as planet. When it's come to people, it's again about the social. And when it's come to planet, it is about the environmental kind of thing. Again, it is not a regulatory or compliance thing, it is voluntary. And this came, you all most of are from accounting profession, it came from management account discipline, if I'm not mistaken. So in that era, people were very much volunteering. Some of the world brands as well as local organization, ethical organization, they were voluntarily contributing to the people and planet. If you go back to 90s and early 2000 years, if you check Sri Lankan corporate annual report, there's something called, they have published voluntarily what they have done to the society or the environmental protection. Especially banking sector, most of the larger banks, they have disclosed about their contribution to social and economic forums. And I can well remember when I joined in 1989 to Sampath Bank, we were very focused on protecting environmental and wildlife. There is a program also, Parisareti Vinadia kind of thing. So a lot of bank, even commercial was working on some entrepreneurship. So you can see that it's evolved. And in my understanding, in 2004, United Nations has published a concept paper. Who Cares Wins, that's the title. I don't know what you call it, a research paper or concept paper. They discuss about the importance of organizations, institutions who care about the society, care about the environmental protection, and they are bringing the sustainable growth, and they create the sustainable environment, everyone can flourish. So that was the, I think, time where the ESG concept formally came into power. It has the muscles from since then. So in later, there's a sustainable development goal introduced by the United Nations. They tirelessly talk with the member countries and agencies like they are respect to central banks, then accounting bodies. Then since 2010, UN is very focusedly, vigorously rolling out this ESG framework. So that was the, I think, foundation for this ESG concept today we are discussing. And if you really look at in Sri Lankan context, central bank under their directive number 5 in 2022 introduced all the licensed banks to adapt sustainable financial requirements and integrate it with this environmental and social risks into their day-to-day business and couple with their credit risk assessment. That's the starting point in Sri Lankan. We are seriously looking at the ESG as a, what you call, non-voluntary basis. So, and same time, central bank introduced policy on Sri Lankan green financing testimony. And in that document, it's give the guidance for the banking sector to adopt something on how to classify, how to identify the environmental and social risks in the sustainable financing. That is a regulatory thing. Then at the same time, central bank has introduced a sustainable financing roadmap. It calls a sustainable financing roadmap 2.0, which covering 2025 to 2029 horizon 5 years. Now, this is the regulatory and compliance requirement, whether you like it or not. All the licensed bank has to adapt, implement this roadmap. That's the starting point. And in addition to that, there's other drivers. Whenever I can remember when I'm negotiating with my friend is here, so he's from International Finance Agency, work for that. When you ever talk to them, getting finance from them, they ask, there's a checklist to be ticked, whether you have ESG policy adaptation. There's huge pressure coming, even IFC, if you to be considered for financing, whether you are in line with these requirements. Then all the banks has a serious issue. At that time, bankers are not very much concerned about ESG. So there's a policy measure. The international kind of pressure coming. Then again, the banks after 2010, banks are very comprehensively adapting risk management systems. So in that risk management also recognize these things as a possible, probable risk to the banking community. So there is drivers to adapt this kind of ESG framework. So in addition to that, I think accounting standard, Sri Lanka Chartered Institute has introduced SLFRS S1 and S2, which refers to the general information disclosures of sustainable financial kind of things, and S2 is more specific climate change disclosure. So therefore, there is a compliance and regulatory requirement for banks to adopt this. So I think in this process, we have already started. There's a 5-year plan. So all the banks, including my bank, I think through State Bank also, we have going on this roadmap. So tell you frankly, in Sampath Bank, we have developed a very comprehensive environmental and social risk management system, which coupled with our existing credit risk management system. So we are on the process of implementing this. I think we are on target. I can tell in representing the especially commercial banking community in Sri Lanka, almost all the commercial banks in line with central bank requirement. So that's the current position of banking sector, and the process is like this. I mean, if I have time, so I can just explain because of the time constraint. So it's like, I mean, whenever the customers come to you for project lending or some lending proposition, we look at those project lending as whether this is required any environmental impact assessment, or whether social impact assessment or environmental licensing is required. Then with our model we have developed, this model can be different from Sampath to commercial, but the principles are same. So we recognize whether the risk involved in this project is high, low or medium. Then we do the due diligence, whether they are adopting the whatever the mitigative measures are in line with the national requirement and the global the ESG standard. Then once we stipulated whatever mitigative measurements, and we grant the loan, and during the loan tenure, lifetime, we closely monitor and ensure these things being implemented. So this is how banks came into play to implement this sustainable development or the growth in the economy.
Okay, thank you so much for that.
I don't know, I have taken more time,
So,
but I just want to.
Okay, so thank you so much for that comprehensive answer. And actually, I wanted to ask from you, like, since you are more into this credit administration, like how the banks are assessing this environmental and social risk. You have already answered for that as well. Now, one small question, like, do you see any kind of a significant difference in between the way how it has been, how it is being assessed in the Sri Lankan banks, and then comparing with the international financial market?
Tell you frankly, it's a good question. Tell you frankly, I have only 2 year experience in overseas bank, in Qatar Commercial Bank in my career, but there are no theoretically there is no such differences. Everyone is adapting. There are IFC standard on ESG. He is very familiar with those things, and there are international standard and disclosure mechanism. Those are common for entire world. So, but the applications might be different. So, if you go to the more Western market, they have more mature financial markets than us. They are sophisticated instruments. If I allow to more elaborate, now he mentioned that commercial bank in Sri Lanka has issued green bonds, blue bonds, social related bonds. In more developed financial markets, there is a premium for that kind of bonds, because they know, the whole community business arena knows that these funds go into the sustainable project. So they are willing to pay the premium. So therefore, cost of funds for those projects are less comparatively to other projects. Now, if you take the HSBC, they have issued billions of dollars finance in a sustainable project. In Canadian banks also, I can remember one of the ING, Dutch international financial company, they also more into the sustainable financing. So there is no much differences, but unfortunately in Sri Lanka at the moment, as I mentioned, banks are compelled to adopt this. But when you go into innovative products, introducing sustainable financial product, it is two-sided. One is you have to, as he mentioned rightly, you have to finance sustainable projects like renewable energy, affordable housing, then something else. But then you have to collect the funds from issuing bonds. But these green bonds or blue bonds, it's not cheap. You have to par with the market rates. So therefore, we are in the very initial stages. We are almost funding at a market rate. But with the understanding and developing this thinking, and it's a good thing you all have brought this kind of topic into surface. So when the wider community to understand the whole thing, then people might willing to pay that premium and invest on those bonds.
Yes, okay. And so now we have heard the views of 2 experts from the banking sector and discussed about the banking related aspects related to the sustainable finance. And now let's move to the role of these policymakers and investors. So moving to Mr. Umar. So my question is now, with your experience in this sector as an investment professional, so how can these policymakers and the investors can work together to attract the kind of sustainable investment flows that we discussed while managing or maintaining this market confidence?
Yeah, I think it's very interesting. The first question you really need to ask yourself is Sri Lanka even ready to actually absorb ESG capital, right? I think it's a very important question because, you know, we've spoken about some issuances that have taken place, but in reality, it is few and far in between, right? So I think one of the biggest challenges we are having as a country is we still need to do much more in our disclosures, right? We need to get, obviously the banking sector is one of the sectors that actually does some disclosure, but we need to move beyond the banking sector and we have to start disclosing across all sectors. And it has to be on climate, it has to be on social, it has to be on governance. And we need to have some uniform mechanisms, because investments only happen when you have data. Without data, you cannot price risk. And without pricing risk, there's no investments happening. So you need to first set the foundation, which is setting some degree of disclosures in place. Yeah? So once that is done, you still have to then take a zoom out approach and really start looking at the market and say, does the market have the depth, to be very honest? I mean, if you look at our equity markets, our free float is very minimal. Look at our bond markets. We don't really have substantial amount of issuances, or there's not much liquidity. So really, is ESG the first question, or is expanding the capital markets along with ESG the actual question, right? So this is also needs to be, spoken in conjunction, because you cannot separate the two, right? And the reason I have to say this is, as a former portfolio manager, I used to work for BlackRock in New York. So if you really start thinking about portfolio management, if I'm going to put a sliver of investments into Sri Lanka, and I say, okay, I'm going to invest in ESG, I can't build a portfolio because there's not sufficient amount of issuances either on the equity or on the debt side. So we need to start fixing this. I mean, we can discuss later on what the fixes are. Then we also have a capacity building issue, right? We have to start building capacity across regulators, across companies, across corporations. And this has to, start taking place now, where, it can start building an ecosystem, right? So let's ask about an issuance. I think there are two issuances that was come to mind, in DFCC and Commercial Bank. If I'm not wrong, both of their SPOs was done by foreign companies, right? I'm not saying that's the wrong thing, it's the right thing, because we don't have the capacity here. But that capacity has to eventually get built, right? And we talk a lot about, green bonds or blue bonds, but the reality is this market has gone well beyond that, right? You have sustainability linked, you have transition, you have so many other securities that can actually play a pivotal role. As a former member in the Ministry of Power, I can speak lengths as to what we could have done to introduce or bring capital into, something like the energy sector. And I think finally, and this goes without saying, I think it's not just for ESG, it's for everything in this country, is policy consistency, right? I mean, we've seen policy going back and forth way too many times. If I remember, I think Dr. Nawala had mentioned in one of his almost like a $10 billion requirement to, reach some of our NDC numbers in like 6 years. How are we going to reach that? Right? That number is huge. So if we are going to get there, it has to be through steady policy, and we can again discuss what that policy looks like and what policies are we discussing. But I think just to encapsulate, in order to get the market going, we have to first do the building blocks. Thanks.
Okay, thank you so much. And linking with your answer, I would like to ask from Mr. Hemal again, like how the banks can decide and design these innovative financial products that support for these ESG goals while maintaining this financial stability.
Yeah, I think it's like this now. If you are talking about the investment, the investment attraction is the price or return what you get, right? Even the recently issued blue bond and green bond also, we have seen that as Agni said correctly. So basically these are the market rates that they issued, right? So and at the same time, when this ESG concept is introduced to my previous bank, Sanasa Development Bank, actually that was done by IFC. IFC was the second largest shareholder of SDB Bank some time back. So I was the risk manager at that time, CRO, and they want us to implement social and environmental risk functions coming under risk department, right? So basically, the banks are number-driven business, right? So targets are there and target profit is there. So the branch level people are bringing the business, right? So according to the IFC agreements with the bank, we need to, each product has to be evaluated social and environment manner. There was some risk rating systems, and from the risk rating system, what is the impact? So each loan will be evaluated. There is some threshold. Each loan will be evaluated based on the environmental and as well as social. So criteria were there. So if it is a high risk, we should, and at the same time, I have to mention that there are some industries are not. These industries are restricted industries. So sometimes chemical manufacturing organization, harmful chemicals or something like that. So these are these kind of products should not be, industry should not be funded. So so we have embedded these systems to our evaluation process. Lot of reaction came from the business, right? So they said that the branch people and the target oriented business people, what they said is, we can't do the business likewise. No banks is doing this kind of evaluation and things like that. So there was a two kind of period. One is voluntary period, right? Now and as Akmimana said, and there are some restrictions and directions are there from the central bank or whoever the regulatory industries. So the idea is we need to realize the importance of this kind of products. Other than these products are not driving, right? The sustainability has to be embedded in the banking system, not only the banking system, whatever the business. And the people who are involved in the business should realize the importance of this one, right? Then only we can drive these kind of products, right? So, and other thing is, when you develop a product, if as Akmimana said, if we can, if the society can understand the importance of this kind of products, so lesser return can be accepted. For example, if it is a normal debenture, suppose the rate is 12%, if it is a green bond or blue bond or whatever bond, right, whatever sustainable debentures are there, right? So that has to be that's returns will be less than that. Then the society will understand the importance of this. And the other thing is, I don't know about the blue bond and the green bond recently we issued. Some third party should give a guarantee to the investors that these funds will be used only for the particular purposes, right? So they can't earn money from sustainable bonds. So third party guarantee has to be there. Sometimes some audit firms are doing these things, so that kind of guarantees are there. And then the cost of funds or cost of returns of this kind of products are less. The bank can again lend at lower rate for the particular purposes, right? If we are using, for example, we can design the product. If we are reducing the energy cost, the loan price can be reduced by 2% or 1% or whatever the percentage. So that means we can encourage this kind of products. As a country, I think we need to have a policy also, right? These policies should encourage banks to promote more and more sustainable products. For example, if there are any tax benefits, then banks are, banks will move to this kind of products, and products will drive. So likewise, and the other thing is, we always, the bankers should have some kind of knowledge on this one. Now, for example, as I mentioned, we need to know about what is energy, what is the energy consumption, what are the energy sources of the country. So likewise, bankers need to develop the knowledge on this one. What is waste management, right? So how do you reduce the waste? Now, even the food also. Whether we are overconsumption the food, right? So likewise, these kind of products and industries has to be developed as a bankers. It's a responsibility of the financial organizations, right? Then only these products are driving, and the bankers should be given now. As Agnimana said, the triple bottom line, we discuss about that. Then only, this kind of encouragement has to be there when they design their products.
And also, like you very correctly mentioned, as the banks, when meeting those targets, those financial targets, that means while balancing those traditional financial performance, while meeting these evolving sustainability expectations, so there should be a proper balance as well. So thank you so much for that input. And then turning back to Mr. Manoj again. Now, like you correctly mentioned in the previous discussion, when explaining the previous matters, so you told like as a sector that is highly regulated, and also from the other hand, the banking sector is one of the most competitive sectors. So they have to think a lot about their profitability while balancing the other aspects. So what sort of actions can these banks take in order to balance these profitability while meeting these social and environmental aspects?
Yeah, that's very important and important question. And whether it is a emerging market or much developed market, as he mentioned, where a lot of sophisticated products are there, all the banking systems are based on three major cornerstones. One is profitability, other one is liquidity, and public trust. Now, if the banks are not creating values and profits for its shareholders, it is obvious shareholders will not happy with the banking. And more than that, if the bank, suppose any bank or incur loss for continuously, it severely affects the public trust, it erode the public trust, right? So again, the liquidity management is very important. So whenever the depositors come, in Sri Lankan context, you have this plain vanilla products, not like the Western countries. So whenever the depositor comes and asks for his money, bank should be able to pay back their money. If slightest delay, or if the bank cannot pay the money, then there's a huge erosion in the public trust. Then it can lead to a back run, and it might lead to entire financial system instability. This is the situation. When it's integrating, when you talk about the ESG mechanism, it is also once banks are financing environmentally friendly social impact projects, there should be public trust increases. To do that, I mean, there should be fully understanding, awareness of this ESG concept. And I don't think, as he very correctly mentioned, whether at this juncture, whether we are in that position. to happen that kind of thinking, drastic change in thinking patterns, we should have the at least well-developed financial markets. Our capital market is very, I would say, primitive stage, right? So even you take the banks, we have plain vanilla kind of products. If you go to Western countries, there are a lot of derivative products, lot of, you call it, you name it zero bonds, lot of bonds, right? So we have not developed up to that level. But having said that, I'm more optimistic about the country. So even though as an emerging market, we as he very correctly mentioned, there are a lot of policy changes to be happen. We have to change the mindset in our regulators as well as people who are in power governance bodies. A lot of things has to be done in that policy area. I know he is very much capable of discussing that. I did to handle that. And in banking sector, what we can do is we have to integrate this ESG into our credit risk management system and evaluate the project even at this imperfection. So when the project comes, bank has to identify whether there is a impact on the environment, impact on the society, what are the mitigative measures to be taken, what is the risk component, whether it's high or low, whether acceptable. Then we have to propose due diligence and mitigative measures. So even with this perfection, I know that most of our clients are SME, they don't have muscle or luxury to have all this in place in their businesses. We have to understand the ecosystem. But still, whatever we can do at this moment, this is a 5-year journey according to Central Bank roadmap. We should start it with the imperfection. My strong belief is that. So even in bond markets, there are people call it green bonds, blue bond. Green bond is more wider definition on environmental, including everything. Blue bond is more oceanic kind of thing, conservation of oceanic resources, ethical fishing, if you want to protect the coral kind of reefs and kind of thing, those are the blue bonds. Right? So forget about these names. There are many instruments. You don't need to, as he proposed, you don't need to reinvent the wheel. You can, get the examples from developed markets. There are a lot of things. The only thing is we have to adapt to our requirement. But I strongly believe we should tread this path and do whatever the imperfection, adopt this ESG policy, and the perfect situation is, as he proposed, we have to do all the policy changes and kind of thing. We know that it is not practically happening. I can remember I did my A-levels in 1986. In that time also, I did commerce stream. We were talking about the development of markets. We are a developing country. Our financial market should be developed. A lot of instruments to be introduced. But the ecosystem not allowed that. So even after 30, 35 years, it has not happened. So these are the things we are talking, but we are, whatever the reasons, we have not done the right things. At least I think in lighter vein, now there is less resistance to changes in structural changes. I think people like you now should go into the policy stream and change these things. So last many years we have not done so many things. So that's we end up with a sovereign debt default. As he rightly mentioned, we have to do that. But same time, I strongly believe whatever the imperfection, we should balance that, and balancing act is very important. Risk-based pricing has to be adapted. But unfortunately, at the moment, even you raise funds from green bonds or whatever the blue bonds, it is at market rate. So if you are doing something special reduction on lending rates, it has to be borne by the banks. Now, there's a lot of acquisition or whatever the discussion, banks are earning thundering profits. But it is not the reality. If you look at really, banks, they turn around trillion asset base and earn some billions. As a percentage, we have to look at the profitability. Still, I believe the margins are much higher when compared to many other countries. But it is because the risk premium. We are unfortunately, we don't have much data on what is the success rate of SMEs or startup companies. In US, I heard that only 10 to 20% survive more than 5 years out of startup business. No, if you finance that, they have a lot of they call white knights. There are a lot of funding agencies, funding mechanism, but still in our funding basis, by and large, banking system. From where banking system gets funds? From depositors. Depositors are the average person in this country who earn their pension or whatever the income and deposit in the bank. Should that be risk for the experiment of entrepreneurs? Now, you are academics, you teach your student entrepreneurship, get the profit. So people don't want to be entrepreneurs, they put their money in the banks. So when the businesses fail, can anyone propose that to be borne by the depositors? No, I mean, it's not correct. So therefore, we have to go this journey. I know it's not a perfect situation. As he very rightly mentioned, we have to train human resources. We have to change the mindset of credit officers, understand technicalities. There are risk models are somewhat sophisticated. And you have to understand, it doesn't mean that every credit officer should know the nitty-gritty of these models. But we can build the capacities. As he very correctly mentioned, most of these issuance of bonds, we don't have locally much expertise. Unfortunately, we have to hire the international agencies. Their charges are, very high. So even to issue a blue bond or green bond, the cost of administrative cost is huge. So banks have to enter those costs into their pricing. That's natural. So even unless the banks compromise their profits and share something with the sustainable projects, practically at the moment it is not happening. But still, I suggest this should continue. So there is a learning process. There's time is learning curve is there. Maybe we might be slow learners, but still it has to be happen. So I think I have answered your...
Yeah, and also you gave a good entry to the question that I next wanted to ask from Mr. Umar, because now though we clearly understand about the significance of the sustainable finance and then about these ESG related practices, now, though there is a kind of widespread recognition in this regard, there are still certain barriers that slow down this progress. So it's important to check about these challenges as well. You have already mentioned a few. So my final question in this industry forum to Mr. Umar. So what sort of challenges have you observed when mainstreaming these kinds of ESG focused investments, and with your experience and with your expertise, so how this Sri Lankan financial market can address that?
I think, thank you. See, I go back to the notion of data, right? Because everything in the financial markets revolve around actionable data, right? So I'm just going to give a small, thing that I did during my time at one of the DFIs. So for example, we wanted to be more impactful. So we wanted to do ESG. So we decided we are going to do climate smart agriculture, right? So if you look at climate smart agriculture, why does it matter? Because it is very evident that farmers are growing food But by the time the food comes to Colombo or food comes to the market, a substantial amount of that food is actually spoiled, right? So then how do you resolve this problem, right? So you resolve it through finance. It's very simple because you need to start, providing them loans to buy vehicles that are going to be more, friendly for transporting the type of goods. You need to find, maybe, cold storages. You might have to finance a supply chain. You might, for example, we did a study on rice, right? So how do you give solar pumps to actually pull water for irrigation purposes? If you take chili, how do you provide the type of netting to, dry chili a little bit more better? There are a lot of components. When we talk about financing, we have to look at every single aspect. Now, why did I, as a finance person, have to go into this much detail? Because that detail is not available. It is very simple. As a DFI, I've had to hire a person. They had to do all their due diligence, right? I spent thousands of dollars. They did their and they came back and told me, okay, these are the things that we need for the sectors that you are focused on. And in order to do this, then we came up with a list of items that we are willing to finance. Then we give that entire list of items to the bank, and we tell the bank, okay, we are going to finance all of this at a concessionary rate. Then the bank speaks to all the vendors and says, okay, give your submissions, we will talk to the farmers, and we will provide these. Because profitability is going to enhance, right? So that's the whole idea. That is where sustainability comes from. It is not, you cannot just do it in a vacuum, right? So there is a lot of data, a lot of follow-ups, a lot of execution that is required for us to get to where we are going, right? So I'm just going to maybe, talk about one more thing. I think finance came up a lot in terms of cost, right? See, when I was at the Ministry of Power, we were having an active conversation with the World Bank at that time to see if we can provide a credit guarantee scheme for generation. Power generation. Why? Because we saw at that time the type of rates we were getting were very, very high. And that is purely because power generation is a long-term gestation period, right? No one is putting up a power plant for 1 or 2 years. They're putting it for 10, 15, 20 years. So what if a country has just gone through a bankruptcy? How do you give sufficient amount of satisfaction or comfort to an investor saying that, listen, this is going to be provided for? So this is the tools, right? So the moment you get a World Bank AAA rated guarantee, right? Just imagine the substantial reduction in your interest rate. Any banker will tell you, Umair Ismail going and asking for a loan versus World Bank asking for a loan is substantially different. That's where the pricing comes in, right? So you need to have practical solutions. Right? And as a government as well, right, we have to start proceeding towards doing actionable items. So for example, we've done the green taxonomy. I know again IFC helped the country, right? But that said, we need to start moving towards a national sustainable finance taxonomy, right? Incorporate social. This might not be very popular, but we need to start mandating phased out ESG disclosure. Top banks are already doing it, right? We need to start mandating it, because by mandating ESG, what you start doing is start creating a database. Once you start doing that, you can start creating a benchmark. Then now suddenly, you can start looking at data from a very empirical eye, right? You can see, okay, this benchmark is an ESG positive benchmark, and look at the performance, versus this benchmark is just a market in totality. You are now coming up with actionable items to start solving the problem, right? But these things take time. They're not going to happen overnight. So I just want to, I know we are running out of time, so I'm just going to stop right now, but I'm happy if there is time to take questions. Thank you.
Okay, so thank you so much.
If you have the time,
Yeah, please.
just add something to his proposal. He mentioned about the agricultural wastage. So I mean, I slightly differ from the business model. I mean, we sometimes it's not practical to give each and every farmer financing for their vehicles and transportation, this thing or cold rooms. Now, I think long time back when we were doing our A-levels, you might academics know that there is a company called People's Company under the Companies Act. If your membership is more than 50 or 100, I can't exactly remember. This has been introduced when a new company had came into that time, in 1982 Act. So the whole purpose was developing the that Fonterra kind of company is to, I mean, overcome these problems. Now, suppose that all the paddy farmers are providing paddy to company A, whatever they are this thing to the production to the A company is milling and doing all these things and transport to the market. So one way they are getting their price for the paddy, and when the company is doing, they are the shareholders, they get the dividends, and their share will be, if there is a high value for shares, they can create a wealth. This kind of creative thinking was there even in 80s. Unfortunately, I think as very correctly mentioned, there's a huge policy barriers, inconsistent policies, and when you are in different political thinking, you oppose everything. So I think we have to understand this mindset, especially in Sri Lankan context. So that's why I'm very positive on future. Now is the time, less resistance. If you want to do the structural changes in economy, do it now. Whether as a citizen of average citizen of Sri Lanka, not belong to any political stream, we wanted to see those policy changes. So if that changes happens, naturally we can overcome this problem. That's I just want to add up.
Thank you so much. And though the time is over, like you know that I hope you have got an idea like where we are today and what needs to be changed in terms of the sustainable finance. And you know, this is not a topic that we can fully cover within a few hours or within an hour, but we believe that this discussion we had today serves as a strong starting point to explore these aspects of this related to emerging financial markets. And also we appreciate this enthusiastic participation of our audience, and we would now like to open the forum for any questions, comments or inputs that you may have. So the audience, this time is yours.
Right. Thank you very much. This is a wonderful discussion. I am so grateful to our experts. I would like to ask this question from Mr. Uma. Now, Sri Lanka, we experience economic recessions, and anyway, successfully we restructure the debt. Now, beyond the debt restructuring, what sort of reforms are further possible to Sri Lanka? I just only feel government collecting the taxes, but beyond that, Mr. Uma, what sort of a possible reforms are available or policy developments are available to our country?
Sure, no, I think that's I think the question of the moment, right? I think we've all been taxed. Now we are asking for what's next. I think if you look at the energy sector, it's very evident we are going to do what's called the unbundling of the energy sector. Why does that Why does that matter? When you unbundle an energy sector, you actually have transparency at all facets of the sector, which is generation, transmission, distribution, and the system operation. This transparency brings more cost reflection, and it actually creates a better environment for you to manage that. The same thing also has to happen in all other SOEs. Government has no role playing in managing hotels. Government has to start, thinking about how do you start, reducing your focus on non-social infrastructure, and that is capital, right? Because just think about it. I think there was a number that was done. The total dividend government gets from all their SOEs, I think less than 1% or some number like this. We are paying close to 9% in debt, right? That's our interest cost. So just imagine if we had actually some of that capital to actually go and disperse in meaningful social, investments. That's going to have a huge benefit for us. So the next step, I would assume, would be for the government to start taking actionable items to do some reforms, right? We have to do reforms. If we do not do reforms, I think another year or 2 years from now, we are going to be back in the same place, because at the end of the day, you can only tax people so much. I don't know if that helped.
Yeah, thank you very much. Thank you very much.
Okay, so thank you very much, the audience. And with that, we have now come to the end of today's industry forum, organized under the theme, Driving Sustainable Finance Through Innovation, Financial Intermediation, and Financial Market Solutions. So on behalf of the Open University of Sri Lanka and Sri Lanka Finance Association, I extend our sincere thanks to all the three panelists for joining with us today, for accepting our invitation and for their time, their expertise, and also their thoughtful contributions. Thank you so much. And as highlighted by Vice Chancellor today morning, we must continue maintaining an active dialogue in between the academia and the industry. So this forum is an important step in that direction. And we deeply appreciate your commitment to supporting both academic and these professional communities through platforms like this. And thank you once again, and we look forward to your continuous support in the future activities as well. So dear audience, as a gesture of appreciation, we would now like to present a token of appreciation to each of our panel members.
Now we are going to present the token of appreciation. It is my pleasure to formally invite Professor Manjula K. Vanyarachige to come forward to present the first token of appreciation. May I now respectfully invite Mr. Hemal Chaminda Lukugiganatu to his stage to receive his token of appreciation. Thank you, sir. Join in for us. Next, it is my honor to invite the Professor Champika Lianagamage to come forward to present the next token of appreciation. I kindly invite Mr. Manoj Akmimana to his stage to receive his token of appreciation. Thank you, sir. Thank you, madam. Now, I am pleased to invite the head of the Department of Accounting and Finance, Mr. Asanka Seniviratna, to come forward to present the final token of appreciation. May I also invite Mr. Umair Ismail to his stage to receive his token of appreciation. Thank you, sir.
Dear ladies and gentlemen, we will now commence the closing ceremony of EFMP 2025. And to begin the briefing of EFMP conference, I respectfully invite Professor Aruna Shantha, Conference Coordinator, EFMP 2025, to the stage.
So hello everyone. So now we have come to the end of 5th International Conference on Emerging Financial Market and Policy 2025. So I would like to share a few reflections on this today conference. So at the outset, I proudly highlight that this annual conference is one of the flagship event of Sri Lanka Finance Association, and it was hosted by the Department of Accounting and Finance, Faculty of Management Studies, Open University of Sri Lanka. As a newly established department, so taking this leadership role has been an honor and a significant milestone to the Sri Lanka Finance Association. So this conference was held under the theme of navigating sustainable growth and innovation in emerging financial market. So it has been a collaborative effort, and we brought together academics in the field of finance across almost all the national university. So I'm very delighted to highlight that almost all the state universities collaborated this time to our conference through paper submission, participating as reviewers, chairing sessions, serving as discussant, coordinating technical sessions, and joining to the organizing committee. So your collective effort has been a backbone of this successful conference. So in today's conference, 14 high-quality papers were presented under 4 technical sessions. So we are confident that this presentation provided insights, ideas that have enriched our understanding of emerging financial market and challenges, opportunities they present. So during the conference, we were privileged to hear an inspiring keynote address by Professor Janice Ho from QUT, Australia. Her reflections on building credible finance in emerging market provided deep insight and sparked meaningful dialogue on how nations like ours can pursue sustainable growth while fostering innovation. In addition, our industry panel discussion with 3 distinguished panelists offered valuable practitioner-oriented perspective on this conference theme. So actually their dialogue reminded us about the critical need to bridge academic research with industry practice in order to address the contemporary issues, the challenges we face today. So we are deeply grateful to our sponsors whose generous support has been instrumental in bringing this conference to a success. So finally, on behalf of the Sri Lanka Finance Association, I wish to extend my sincere thanks to each and every one of you for your presence, contribution. I wish all the very best. I look forward to seeing you in the next year's conference. Thank you.
Thank you so much, Professor. And as you already know, this morning we conducted the technical sessions of this conference, and we had received several excellent papers from authors both locally and internationally. So while acknowledging and while appreciating all those contributions, now it's a time for another important moment of today's event, the declaration of the best papers of the conference. For this, I warmly invite Professor Champika Lianagamage, Conference Chair of EFMP 2025.
Good evening, everybody. We have come to the end of the conference today. So I'm here to announce the winners, the best paper selection today. After a very careful evaluation process, we have selected 3 papers as best papers. I will read the best papers, but they are not in a particular order. The best paper award goes to the paper title, Barriers to Credit and Blockchain's Potential for Retail Micro Enterprises in Harare, Zimbabwe, presented by Jonathan Niazam. The next best paper award goes to the paper title, Unveiling the Influence of Sustainability Control Systems on the Adoption of Circular Economy Business Models, a Mixed Method Approach, authored by DLMNK Aryasena, University of Ruhuna. The next Best paper award goes to the paper title, Does the Stock Market React to Politically Appointed Central Bank Governor? Authored by Pavitra Herath and Emil Uduvalagi. We wish all the best to all the best paper presenters as well as all the presenters who did their presentation today morning. Thank you very much.
Thank you so much, Professor, and once again, warm wishes for the authors of these best papers. And with that, we extend our heartfelt thanking for all the parties who supported us for the success of this event. And before we conclude today's event, let us once again acknowledge the generous support we received from our sponsors and the partners. Their contribution has made this event a success. So concluding this event, we will be playing videos of our sponsors and partners of this event to take a moment once again to appreciate their continued commitment and collaboration. So dear ladies and gentlemen, once again, thank you for being a part of this meaningful event, and we look forward to seeing you again in a similar forum in the future. Thank you.
The moment is here. The future of the chartered accountant begins now. A curriculum designed to build trust, drive strategy and stories, inspire transformation. Presenting the CA Sri Lanka Curriculum 2025 to 2030.
As an aspiring or practicing investment professional, you'll need the knowledge and skills to thrive in a highly competitive industry. Look no further than the CFA program. The Chartered Financial Analyst program is the gold standard in investment management education. It's a rigorous self-study program that covers everything from ethics and quantitative analysis to portfolio management and wealth planning. Earning the CFA charter opens doors to a world of opportunities. It validates your knowledge, skills, and ethical standards, making you highly sought after by top financial institutions. The CFA program is designed to equip you with the kind of expertise and real-world skills and investment analysis that will help you advance your career. Whether you're a practicing investment professional, a student, switching careers, or just looking to start a career in this field, the CFA program offers a way to move forward and achieve your financial goals. CFA charter holders occupy a range of investment decision-making roles, typically as a research analyst or portfolio manager. CFA charter holders go on to enjoy lifelong careers in asset and wealth management, investment banking, commercial banking, and consulting, alongside a diverse range of career paths in and outside the industry. CFA charter holders command higher salaries and enjoy better compensation packages. As a globally recognized credential in the investment management profession, earning the CFA charter demonstrates to employers that you have the knowledge and the commitment to thrive in today's complex and evolving investment industry. The CFA designation is a mark of distinction, and investment firms know it represents a high standard. We understand that pursuing the CFA program is a challenging journey, but remember, you're not alone. CFA Institute offers comprehensive study materials, practice exams, and a support community. Are you ready to take your career to new heights? Enroll in the CFA program today and start building your foundation for a successful future in finance.
Growth is always a seed nurtured in lush conditions. Visionary education too springs from seeds of innovation. The Open University of Sri Lanka has been the site of fecund growth for many a Sri Lankan who seeks a second chance in lifelong learning. Through our revolutionary mode of teaching, the open and distance learning mode, we have nurtured the lives of students who seek academic engagements in the humanities, social sciences, natural sciences, engineering technology, management, health sciences, and education. Fertile soil and nutrients create the conditions which allow a seed to face the world. We offer extraordinary facilities for the ODL learner. Library, labs, day school space, study space, recreation, IT labs, and field trips. As the plant grows, it must face fresh challenges. It must expand, branch out to expand its reach, its sphere of influence. Our reach is the widest any state university could offer. With 9 regional centers and 19 study centers planted all over Sri Lanka, OUSL brings a world of learning to your doorstep. Obstacles are common challenges for a growing plant. Timely forums allow our students to be in touch with realities of the outside world. As the new leaves spread, occupy the skies, and bear fruit, symbolic celebrations are inevitable. Every year, OUSL sees over 5,000 students graduating from a wide range of disciplines. And all these successful graduates are an asset to the nation, for they will be the seeds that will plant our tomorrows. The Open University of Sri Lanka. Open freedom.